Pinegrove Software's Internal Rate of Return IRR Calculator, a walkthrough showing its use and benefits. Before we show you the Internal Rate of Return Calculator in action, let's spend a quick minute reviewing some basics about the IRR calculation itself. If IRR calculations are something you are familiar with, you can use the slider at the bottom of the video screen to skip ahead. Just put your mouse over the moving red line. From time to time I may slip and start using financial jargon which may not be, at first, clear to all viewers. If that's the case, I would suggest that you continue to watch, and I think that by watching you'll pick up all the necessary points needed to use this calculator. Okay, let's get started. What is an IRR calculation? The internal rate of return is the gain or loss produced by an investment expressed as an annualized percentage. It is a return on investment or ROI calculation. The investment may be in anything: rental units, stocks, bonds, equipment. The IRR calculator will even calculate a single IRR for a mixed investment cash flow. This means if you invest in both stocks and rental property, you can calculate your combined return on your investment using the Pinegrove IRR calculator. Since the IRR is an annualized ROI calculation, it also allows you to compare investments that are for periods longer or shorter than a year. If you invest $1,000 today and it returns $1,250 in 6 months, is that better than investing $1,000 today and having a return of $1,900 in 18 months? Of course, your investments can have a much more complex cash flow than what is suggested by this question. Some basic points about all IRR calculations. All IRR calculations need at least two amount entries: the initial investment amount, a negative value, and the final ending value, a positive value. In between the beginning investment and ending value, there can be as many additional investments made or withdrawals taken as desired. Whether an amount entered is a positive value or a negative value is determined by its purpose. Is the amount an additional investment, a negative value, or a withdrawal, a positive value? Think of it this way. You have a checkbook. On day one, you are making an initial investment. The amount is negative because you're writing a check to invest the money. When you make a withdrawal from your investment, you have money to put into your checking account. That's a positive amount. Benefits of using the PGS IRR calculator. You can calculate the IRR ROI on past performance of an investment, then save your work and monitor the IRR on a going-forward basis when new investments and withdrawals occur. Who wants to keep going back and re-entering historical data every time they want an updated IRR number? Of course, many brokerages or financial planners will calculate an IRR for you. But what happens if you have investments in many accounts or across many asset classes? Don't you want to know a combined ROI for all of your investments? With this calculator, you can calculate one IRR for all of your stock trades and your future trades, and then include your rental property income and expenses to arrive at one IRR number for all of your investments. Beyond the benefits just mentioned, our IRR calculator includes features that you frequently don't get with other calculators, particularly those found on the web. For example, you can print a professionally laid out report that includes all details. Or with one click of a button you can copy all the input values and results so the data can be pasted to other programs. This feature is great if you are making a PowerPoint presentation or creating a business plan. Your data can be exported as well to industry standard CSV files. CSV files can be imported into other programs. Okay, let's get started. This is the main IRR calculator window. As you can see, rather than have you watch me key in relevant data, I took the opportunity to enter some values. Before I go into the details of the IRR calculation that you see here, let me point out a couple of things to you. 1. you can clear the calculator with the click of the reset button. This is what the calculator will look like when you start. With an empty calculator, let me point out one thing to you about editing numbers and dates. Some users want to use either the delete key or backspace key to clear a value prior to entering a new value. You don't have to do that. In fact, you can't. The best way to enter or edit dates or numbers is to use the tab key to move from one entry to another. Once you're at the value you want to change, just start typing. The prior value will be cleared for you. For dates, tab to the date. The last part of the date that you edited will be selected. Select another part of the date by typing the / key, as I am doing here. When the date part is selected that you want to change, just type the new value or use the up-down arrow key to make the change. Of course, if you're a fan of the mouse, you can click on the little arrow and a calendar will open. You may want to know how an investment is doing over time. Rather than have you keep rekeying in values when you want to know a current IRR, you can save your work and open the file for later use. That feature is going to allow me to retrieve the values I just cleared. I'll simply go to the File menu and pick the file in the most recently used file list. Okay, we're set. Let's talk about the actual IRR calculation. I've set up this calculation, as you can see, to calculate the rate of return on various stock buys and sells for one calendar year. For the initial investment, I could enter the dollar amount that I used to open the account. However, this brokerage account has been open for several years, so in this case I'm going to enter the ending balance as of 12/31/09. I'm going to treat the brokerage account ending balance as the initial investment, so it is entered as a negative amount. If why this is a negative value is confusing, don't worry too much about it. I think it will be clearer to you as we go along. I will add, though, as a point of clarification, that you can think of it this way. Go back to our checkbook analogy that I had in the slide you just saw. Because I only want to know my IRR for 1 year, I can pretend that the brokerage account is being set up on 12/31. So I'm going to write a check from my checkbook, which is negative, and I'm going to open the brokerage account with $58,556.92. In the total periods field, I enter 12. This is because I had about 12 buys and sells through the year. Don't worry too much about what you enter for total periods. This value is used to tell the calculator how many inputs to create in the input grid below. If you need more space for inputs, increase the number. The calculator will create more cells without altering the data you entered. Cash flows by default are created to be 1 month apart. If your cash flows happen to be more or less frequent, you can change the default frequency by going to the Preferences menu and selecting Default Frequencies and Guess. Cells to enter cash flow amounts are created anytime you increase the number of total periods. Once they are created using the default frequency, you can change the date to be the exact date you want. The initial investment date is either the date on which the investment started, or it's the date from which you want to start calculating the IRR. In our case, with this example, since we are calculating the IRR for an existing brokerage account, I've entered the date from which we want to start the calculation. Now that the initial values are set, we are ready to start to enter the cash flows. The cash flows in this case are the stock purchases and sales. Remember, since to make the investment, that is, buy the stock, we have to write a check. Even if it's just figuratively, we enter stock purchase as a negative value. And when we sell stock, we could put the proceeds into our checking account. So therefore we enter sales as a positive number. Let's check out our entries. On 1/31/2010, there was a purchase made for IBM stock, and another purchase on 2/28/2010. The first sale was made for Google shares at a total of $8,290.12. I'm not going to read all the entries to you. Rather, I want to point out some details about entering cash flows and to show you some tricks for making it easier to enter data. First though, remember how in the introduction I said that all IRR calculations need at least two values, a beginning investment amount and a final value? So where is the final value entered? The final value is entered into the last cash flow cell. I'll scroll down here so you can see what I mean. The final value is the amount you would get if the investment were liquidated as of the date entered. In our case, it's the total market value of the stocks as of December 31st. And again, it is entered here as a positive value because if I were to sell them, I would get a check for this amount to deposit into my checking account. What happens if you have more cells than you need? No problem. You can enter the final value in any row you desire. Remember, zero values have no impact on the IRR results, and therefore zero values after the final value have no impact either. If by having zero values after the final value bothers you, or you need to make a formal presentation and you do not want to show these zeros, then decrease the total periods by the appropriate number and the extra zeros will go away. Let me point out one thing. The description field holds over 200 characters, so people use it to enter check numbers, share quantities, and other details. In the next segment, I'm going to cover some time-saving features and techniques for entering and correcting cash flows. I'm going to wrap this up soon, but before I do, I want to mention some things about data entry and correction. No matter how easy it is to enter data, data entry is a tedious task, and correcting the inevitable data entry mistakes can be a pain. We think we have recently made some improvements in the design of the IRR calculator that go a long way to making data entry and corrections easier. Let me point them out to you. 1. Right-click on a period number column. The pop-up menu gives you the option to insert a missed cash flow. You can also delete or clear a cash flow. 2. On the Preferences menu, there is the option to insert cash flows. You may have both irregular cash flows and regular cash flows for one investment. You can manually enter the irregular cash flows and then use this window to insert the regular cash flows. 3. Also on the Preferences menu there is this option. If cell is 0, copy value from prior cell. When this option is on, that is checked, if you click or tab to a cell with a 0 in it, the value in the prior cell will be copied. This option is off by default. I suggest you try it out. It can save a lot of typing. 4. If you've discovered that you've made a mistake entering the wrong sign for an amount, you don't have to re-enter the value. Just click on the cell, click again to select the value, and then double-click. The sign will be reversed. That's it. If you've come up with any other ideas that make your data entry tasks easier, please let us know. We'll review the idea and maybe include it in a future update. Thank you for watching our video. We hope you found it beneficial. We have other videos about other calculators at pine-grove.com. We hope you stop by and take a look.